Going into 2011, we identified Oklahoma City as one of the nation's best bets among secondary markets. And after a so-so first half, Oklahoma City had a big third quarter that's making that prediction look pretty good. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your Oklahoma City update. In 2010, Oklahoma City ranked 7th nationally with annual revenue growth of 7.2%. And this was a market that was helped by the economy recovering faster than in most markets, with some good job growth not only in the energy sector, but also in professional business services and even in construction. So at the end of 2010, overall occupancy in Oklahoma City was at 94% and annual rent growth was at 4.3%, and both were well above the U.S. averages at the time. Now, where does that leave us right now? Let's start with occupancy rates. You can see that occupancy took a dip in the first half of 2010, perhaps due to some pretty good rent growth that came earlier here than in most markets, and that might have stymied demand a little bit, but that pattern didn't last long. In the third quarter, occupancy jumped 1.2 points, and that's one of the larger increases in the U.S., and that brought overall occupancy back up to 94.5%. And that's a lot better than the South regional norm of 92.3%. But like what we see all across the South, there is a tremendous gap in occupancy rates by product age groups. Look at apartments built in the 2000s, the 1990s, and the 1980s. All have very strong occupancy rates between 96 and 97%, but significantly weaker rates among apartments built in the 1970s and prior to that, both around 91 to 92%. And those older units make up about 40% of the total apartment base in Oklahoma City, so that is weighing down on the overall numbers. And we're also seeing that trend play out on a submarket level. You can see that occupancy is weakest at the bottom end in OKC's most affordable area, South Oklahoma City, where occupancy is at just 92.2%. And by comparison, occupancy is strongest in the metro's two priciest areas, in-town Bricktown at 97.9% and Edmond-Logan County, where occupancy is at 96.2%. And let's switch gears and talk about pricing. Same-store rental rates jumped 2.2% in third quarter specifically, and that brought annual effective rent growth back up to 4.6%. Now, year-over-year rent change in Oklahoma City has hovered around 3 to 5% in each of the past 5 quarters. Not much of a surprise to see rent growth levels evening out a bit. And the same patterns we saw in occupancy, we also see in pricing by submarket. The top end is further separating itself with year-over-year hikes of 7.9% in Edmond-Logan County and 6.6% in-town Bricktown, and South Oklahoma City, again at the bottom end, just 1.1% annual rent growth. And one final set of numbers here for you. Oklahoma City is significantly outperforming nearby Tulsa. Occupancy there is at just 92.7%, nearly 2 points lower, and annual rent growth came in at just 2.3%. Going forward, there's little reason why Oklahoma City shouldn't remain one of the nation's better secondary markets. The economy here is in pretty good shape, and like a lot of the Texas markets, it's pretty close to a full recovery, and that should keep apartment fundamentals in pretty good shape. And for more details on secondary markets and major markets in the Texas, Southwest, and the Mountain region, attend our Texas Southwest Conference. It's tomorrow, November 15th, but it's not too late to sign up if you're in the area. Get all the details at mpfresearch.com. And that wraps us up. So until next time, for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with MPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, MPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.